And this was driven by the Chinese stocks that led the losses regionally. This as investors digest the inflation figures that have come through, as well as the COVID situation in mainland China. But let's hone in a little bit on that inflation figure that has actually everybody talking. PPI numbers, that's the producer inflation numbers, coming in at 8.3% versus the expectation of 7.9%. But that is a similar theme that's also lingering around the consumer inflation figures, coming in at 1.5% versus the expectation of 1.2%. So as a result, we saw some of the indices a lot lower. Hang Seng Index down by 3%. The Nikkei also following suit in negative territory, down 0.6%. And when we look at the picture from a European perspective, it's choppy trading right now. Investors globally looking out for Wednesday's CPI figures that we are expecting from the United States. However, to give us a better perspective in terms of what is happening with the markets, we are joined by Gary Boyson from Rand Swiss. Gary, thank you so much for your time. So everyone digesting these inflation figures that we're seeing out of China, you look at what's going on from a European perspective, and I'm wondering whether that negative theme is starting to flow through to our local markets. How did we open?
Yeah, so we're off a little bit, not as much as China was off this morning, and absolutely, I think it's a real concern what we're seeing in the inflation numbers that are coming out across the globe. So, as you said, Chinese inflation is specifically the producer price inflation, at very, very high levels, and you've got to assume that is going to feed into our economy at some point. Our inflation picture has been a lot more benign than even the US, which, as you said, expecting inflation figures now above 8%. It was expected to increase 8.3%. I've just seen the consensus expectations have moved up to 8.5%. And I mean, that is absolutely incredible to see the US market is inflating a lot more quickly than South Africa, and very, very scary. So you get the sense that this is going to flow into our economy, but our market's largely shrugging it off, and mostly because we were a commodity-based index.
Before we talk about things locally, the one supposed topic everyone was talking about on social media is Elon Musk deciding not to join the Twitter board. But it's quite interesting when you look at that share price performance in pre-market trade, fell about 7% rather, and right now down about 3.5%. What do you make of this? I mean, does this give him room to increase his stake in Twitter, or perhaps even do a complete total takeover, seeing that the one hindrance was the fact that he couldn't increase his stake by 14.9%?
Yeah, so there's always kind of volatility when you have big announcements like this, and that's why, after we saw the kind of 25% increase and then another day up for Twitter, I mean, you expect some sort of profit taking as well. Anyone that was holding Twitter, certainly from an institutional standpoint, is probably reassessing their position and going, wait a minute, there could be a very different strategic direction, as Parag Agarwal was seen as a set of safe hands, and now suddenly you have Elon Musk entering the fray. One interesting thing to note about Twitter is that the actual capital structure of Twitter is very different from what you see in the likes of Google and the other big tech companies, in that there are no preferential voting rights in their shares. So with Elon Musk becoming the biggest shareholder at 9.2%, he will have significant influence, far more so than if he had bought 9.2% of Google. So it's going to be very interesting to see what his vision is for Twitter, and I get the sense that I hope it's going to be positive. And he does seem to have that magic touch.
Yeah.
He's one of the few Silicon Valley entrepreneurs that have managed to found essentially $3 billion companies. So let's see how it goes. But
All right, so locally we had the manufacturing figures that came out probably about 25 minutes ago. Overall, what's your sense of where this sector is going? I mean, it's not a sector that we talk about quite often from a market's perspective, but we certainly do talk about some of the companies involved in that specific industry.
I think it's been difficult. It does look like a small miss on expectations for today's number. It is a very volatile number as well. So you can't read too much into a single data point, but it does look like the detractors really were the petroleum, the chemical products as well, machinery, vehicle manufacturing also under a little bit of pressure. But food and beverages look pretty solid in the number. And you get the sense that the manufacturing sector in South Africa is recovering, but these are older numbers as well. This is looking at the February picture, and the world has changed significantly in the last 2 months, obviously with the invasion of Ukraine, with huge changes in the way that international prices are being determined. Things like wheat and maize and petrol, and obviously via the oil price. So it'll be interesting interesting to see what the March and then April figures look like. And like I said, it is going to be a volatile number. I suppose the one concern that you might have about South Africa being, again, a commodity-driven economy, our currency is starting to get very, very strong, which is bad for our manufacturing sector going forward. It's not quite Dutch disease, but it is certainly an influence. It does make our manufacturing sector less competitive when you look at it in international terms.
It's a new trading week. What are some of the dominant themes you believe will get into the coming week?
Well, it's going to be a short week as well. Obviously, we've got public holidays coming up on Friday, and that's not just locally, that's internationally. So you do expect, I think, traders to take off maybe a little bit of risk ahead of a very long weekend. But we've also got US earnings season starting up. We've got some of the banks reporting. I think that's going to be very interesting to have a look at. And of course, the big themes that are continuing to play out is what we've been talking about. It's the idea that we're going into an environment with very, very high inflation. I think everyone is very concerned how central banks are going to react to this. We know that interest rates have to rise to combat the levels of inflation that we're seeing, but it's a very difficult balancing act. You raise those interest rates too quickly, and you could throw the global economy into a recession. We've been looking at it saying that US, I think our base case is that US inflation could get as high as 10%. You might see double-digit inflation in the US, and that really could mean that we'll see a recession. We've seen Deutsche Bank coming out last week predicting that you will see a recession in the US. It's the first of the big banks to predict it. You get the sense that might be a trend to follow. It's going to be a difficult environment, and I think until we see a moderation in inflation and we see some sort of ability for central banks to get inflation under control, I think we're going to have very, very choppy, very, very volatile markets.
You mentioned US earnings seasons, the banks are going to kick us off. But overall, what will you be looking out for, especially when you focus on some of the companies that interest Rand Swiss?
Well, I think the most important thing is to realize that the numbers that are coming out now are going to be a lot less rosy than we saw last year. Those base effects are going to start to move through. It was very easy to produce a stellar, increase in earnings compared to your 2020 numbers when you'd just been through COVID lockdowns. So I think it's going to be a little bit more difficult for companies just to show those big kind of top and bottom line increases. But what really I think we're going to be looking for in the numbers is how effectively can companies pass on price increases to their customers, and that's really, I think, going to be the difference between a good company and a bad company in this earnings season. If you can pass on that inflation to your customer, and if you have that pricing power, I think that's going to make an exceptional company. Anyone that's had to contract their margins, anyone that's got to almost swallow those increases in commodity prices, increases in input costs, I think those companies are going to get hit very, very hard, or their share prices will at least.
Gary, thank you so much for your time. That is, of course, Gary Boyson from Rand Swiss giving us his perspective in terms of what to look out for as we get into the short week. We've got those US inflation figures that are coming out on Wednesday, and of course, we will dissect them for you. And of course, keeping you updated when it comes to US earnings season. But that is it from me. Until next time, goodbye.